Now, Bitcoin has raised all of its gains since Donald Trump's election victory. While prices have staged a partial rebound, analysts warn that shrinking market depth and rising volatility could keep digital assets on edge in the near term. Now, here's a deep dive into what's driving the turbulence in crypto markets. Take a look.
Bitcoin wiped out all of its gains since the election of U.S. President Donald Trump, who vowed to make America the crypto capital. The currency is down roughly 20% in recent sessions, reversing the rally that had pushed it to a record high above $125,000 in October. The sell-off coincides with broader investor concerns about inflated technology valuations and uncertainty over the U.S. Federal Reserve's rate cut trajectory. Precious metals and digital assets also dropped sharply after Trump named Kevin Warsh as the next Fed chair, raising expectations of potential balance sheet tightening. This move could potentially reduce liquidity in financial markets. Analysts point to a sustained contraction in market liquidity as a key concern. Bitcoin's average 1% market depth, a measure of how much capital is available near the current price, stood above the $8 million earlier in 2025. Following the October liquidation event, the largest in crypto history, that figure fell to around $6 million and has now declined further to roughly $5 million. Lower market depths means fewer buy and sell orders close to prevailing prices, making Bitcoin more vulnerable to sharp and erratic price swings. Analysts warn that thin liquidity conditions are likely to persist in the near term. Bitcoin initially surged after Trump's election victory as investors anticipated pro-crypto policies. While the administration has introduced regulatory changes and established a reserve using seized assets, it has not launched a large-scale government Bitcoin purchasing program, tempering market expectations. Trump's personal crypto gains have also raised eyebrows over conflict of interest concerns. At the same time, cryptocurrencies are increasingly correlated with equities during periods of market stress, making them more sensitive to macroeconomic developments. While some analysts believe selling pressure from large holders or whales is beginning to ease, suggesting a possible bottom formation. Others see limited bullish signals and expect continued volatility in the months ahead. Business Bureau Report, WION The World.